Good day, and welcome to the SNN.Network Summer Virtual Event. Our next presenting company is ProPhase. It is now my pleasure to turn the floor over to your host, Ted Karkus, CEO and Chairman of ProPhase Labs. Sir, the floor is yours.
Awesome. Thank you, Rashawn. And thank you all for joining me today. For those of you that are longer-term shareholders, I apologize if I spend the first 4 minutes going over a little bit of the history of our company. I think it's important for investors to understand where I came from, where the company came from, to give you, you talk about, at the end of the day, it's all about management in terms of the companies you invest in. Well, if you don't know a little bit about my background, the background of the company, then you can't really say that you're interested in investing in management. So I'm going to get to all the good stuff. Let me first start by talking about none other than the forward-looking statements. You know what? I feel like I should take 30 seconds to read it very quickly. The presentation contains forward-looking statements relating to our strategy and business objectives. All statements other than statements of historical facts included in this presentation may be deemed to be forward-looking statements, including statements related to our plans to grow our new whole genome sequencing, WGS business by leveraging our existing CLIA labs and retail relationships and to build a genomics database, our ability to offer competitive pricing and decrease turnaround times for our diagnostic and genome sequencing services, and our plans to acquire additional laboratories. Man, I only wanted to read the first sentence. So you can all read the rest on your own. I will, we will have an understanding that you have read the forward-looking statements. I'll probably refer to it later in the presentation. I am a big believer in trying to be as open a book with our shareholders as possible. However, in order for me to do that, from a legal perspective, I also need to be protected that if I'm going to share as much as possible with you, including future plans and projections, there are no guarantees in the world, but I will do my best. I will always give you my word to be honest and fair, and what I believe in the future and what I present to you really is what I believe in. Having said that, I'll go to the next slide on the corporate overview. I'm not going to go slide by slide here, and I would like to give a little bit of quick background. I have a history of about 40 years of investing in small cap development stage companies. I'm 62 years old. I feel like I'm 39. I probably act like I'm 18 sometimes, but I have a lot of energy. I have a lot of enthusiasm. I'm working my butt off. But the point is I also have perspective. And because I worked on Wall Street and I invested in so many companies, the one thing I learned is that most managements of most companies have an exciting product, an exciting service, an exciting story to tell. I would invest in their companies, me and my friends would invest, and 95% of the time, managements did not execute. The one thing I can tell you is that I execute and I think like an investor. And because I think like an investor, what I care about first and foremost is terminal value on a per share basis. I learned that when I was on the sell side working on Wall Street. What does that mean? It means I care about the value of the company divided by the number of shares outstanding. I could do all this great stuff and make acquisitions and issue tens of millions of shares and have 100, 200, 300 million shares outstanding. But then at the end of the day, you're not going to have a value. You might have a valuable company, but not on a per share basis. So I care deeply about the number of shares outstanding. I'm the largest shareholder in the company. And so everything I do is with the shareholder in mind. And at the end of the day, what's our company worth today divided by the number of shares outstanding? What's our company going to be worth in 1, 2, 3, 5 years divided by the number of shares outstanding? All right. So historically, I'm not going to go into the full history now. You can read it on my LinkedIn profile. You can read it elsewhere. The bottom line is I took over control of the company about 12 years ago. I had to turn around a company that was failing, a cold ease, cold remedy brand that was going out of business and no other assets in the company. We turned it around. It took a number of years. Our stock bottomed out at 65 cents to $1. And since that time, all my friends and network of people that all invested and supported me and was a shareholder alongside of me, since that time, they all stuck with the stock and or hopefully bought more stock. Since that time, we paid out $1.80 in stock dividends, and our stock trades at 5 and change. And the outlook for the company right now looks brighter than at any time in the history of the company. So for those of you that are new to the story, new to the company, I had somebody on a one-on-one say, boy, I wish I knew you 8 years ago. Well, guess what? Now is just as good a time because what I and our management team are going to do over the next 8 years is going to be dramatically greater than what we did over the last 8. And there are plenty of returns over the last 8. All right. Having said that, we sold the Colby's brand for $50 million, turned around, sold it for $50 million a few years ago. Our stock was undervalued at that time, so we did a buyback, 2 stock buybacks, in fact. And then at that point, I didn't know what else to do with the capital. You can't just snap your fingers and find a new business to invest in, so I did 3 stock dividends. We just did another one in the second quarter of this year because our cash flow was so strong, you know, from the COVID testing back in earlier in the year. So we did another 30-cent dividend, so we're up to about $1.80 in stock dividend. We did do a raise in January, in mid-January. We did that to really blow up our COVID testing business big. And again, historically, we were a dietary supplement company and a manufacturing company. We still have both of those businesses. Our dietary supplement business is growing. But late last year, we got into the COVID testing business by buying a CLIA lab. I told everybody late last year we were going to get into the COVID testing business. Everybody said, Ted, why are you calling me now? Let me know when you actually buy a lab and when you actually want to do a transaction. So nobody wanted to talk to me at $3 or $4 in the middle of last year, and then our stock went to 16, and at $14 to $16, all of a sudden everybody wanted to talk to us. So now I'm telling you, it's 1 year later, our stock is at 5 and change, and I'm telling you we are about to go in new additional directions that are going to be explosive. So I will get to that in a couple of minutes. I just want to go over the COVID testing a little bit. So we, in very short order, late last year, I said we were going to get into the business, and within 6 weeks, we had bought our first lab. And within a short term after that, we blew out a major state-of-the-art lab in Garden City, New York, capable of over 50,000 COVID tests a day. We have state-of-the-art equipment. Our turnaround times are as fast or faster than any lab in the country. Our customer service is fantastic. We have a great high-complexity molecular lab team and IT team. And we went about doing our business. It ramped up very fast in January. We were doing such a good job. We had customers that were dropping all the other labs they were doing business with to just do business with us. We were able to raise this money at $12.50 a share primarily through Think Equity in mid-January. And then literally the day after we raised the capital, COVID testing started to drop dramatically. The incidence of COVID dropped dramatically. COVID testing dropped with it. We had a 5 or 6 month decline in COVID testing, and we're just coming out the other end of that now. So we've gone through a point where historically we were a dietary supplement and lozenge manufacturing business. We still have those businesses. The dietary supplement business is growing. We got into COVID testing very quickly. We ramped it up big. Now we have a second wave of COVID coming. We have all those customers who love us from early in the year. We did very little business in the second quarter, but now we're in a situation, and we had all this overhead. We had 80, 100 people working for us in our lab in Garden City, New York, and there just wasn't a lot of business for them. And what you got to understand about overhead in this business, when you're doing a lot of COVID testing, maybe our employees account for about $2 in cost per specimen, but when you're not doing any business, that cost could rise to $20 per specimen. But at the time, we were winning these big RFPs. We won an RFP with Dutchess County of 300,000 residents. We won a major RFP in Township of Oyster Bay, 300,000 residents in New York, 12 or 13 public schools. We were about to ramp up that business in a huge way in the second quarter, and then, but the incidence of COVID kept dropping, and then the rules changed. You didn't have to wear masks, and you didn't have to test large crowds. So all these graduations and weddings and proms that we were going to do testing for, all that business disappeared. So we had a whole business setup that would have exploded big. But meantime, the reason why I go all over that is we were in a situation where we had tremendous overhead, minimal COVID, but we still did some COVID testing. But it was interestingly, we still did about break even in the second quarter. So in our worst quarter, also seasonally, our dietary supplement business and manufacturing business, the second quarter is the weakest quarter anyway. And so now we had a COVID business where we did very little COVID. And the reason why I say it brought break even, just to be perfectly clear, we did report a $1.4 million loss, but it included $1.7 million of non-cash charges. I'm not allowed to put that into the official filings. The FDA frowns upon that because it's considered non-GAAP. But those non-cash charges were almost all because of stock options. So if you take that out, I can explain that very quickly. If you take out the stock option expense, we were actually profitable in the second quarter. We paid a $4.5 million dividend in the second quarter. If you were to add that back in, you would actually see that our cash and our net working capital actually grew in the second quarter, in the worst quarter of the year. The stock options, by the way, were because we didn't have anything available in the employee stock option plan. We had to replenish that. We didn't do that till our shareholders meeting. And so until we did that, when I built out this company big and did acquisitions and acquired senior management and all those things, we issued stock options. In a lot of those instances, none of those could be officially issued until we had the annual shareholders meeting. So we had a year's worth of stock option expense, all vesting and all being expensed all at one time. That'll hit the second quarter. So in our worst quarter, with very little COVID testing and big overhead, we still were a little bit above break even without the ESOP issues. Now we're getting into a situation. COVID is back through the roof. I wasn't even expecting that this early in the year. The incidence of COVID is way up. Testing is just literally taking off in a huge way right now. We have all of our customers from last year. And then in addition to all the customers from last year coming back, we have one customer who they had to shut down. They were testing across Texas, and they shut down in the month of February. And when there was bad weather, they kept telling us they would reopen and didn't. We're getting indications they're opening up again. All of our other large customers are open, either opening or are open for business and are ramping up very quickly. We have some new lines of business that are huge. We're opening up independent pharmacies across the country. What's nice about an independent pharmacy is the owners are entrepreneurs. These are people that want to do business, unlike a pharmacist at a CVS or Walgreens who gets paid the same either way. With the independent pharmacies, these are owners that want to do more business. They want more foot traffic, and we're opening up. I haven't disclosed this publicly. I'm not going to get into it right now. We're opening up an enormous number of independent pharmacies. Each one of these independent pharmacies right now is doing, let's say, 10 or 20 specimens a day. We think that number is going to continue to grow, and the number of pharmacies we open are continuing to grow. The point of that is a consistent business that's going to go throughout the season for as long as there's any COVID around. There's a myriad of reasons why somebody would want to get tested for COVID. And that business, I expect, is only going to grow. And then, of course, we have the schools across the country. We are well positioned with schools. One of our largest customers did testing for 75 or 80 schools in Long Island this past year. They're ramping up. The indications for the schools are out of control. Now, this feels like deja vu all over again from last January, where our business was exploding. We raised all this capital, everything's great, and all of a sudden, the floor fell out. But what's interesting is this is just at the beginning. We have all the customers. We have a year under our belts in the business now. We have a fantastic lab, tremendous list of customers that we've now been building for a year. So we're no longer new to the business. We're not executing for the first time. And as I said, we have a management team that has a history of executing. And now in year two, we're going to be able to execute levels better than we did the first time around. And we have new customers coming to us. And we have new RFPs that we're winning. So there's a tremendous amount going on as pertains to COVID. What's interesting is that's not even what I'm most excited about. We have a company with a stock price that's probably trading, and my IR firm, and by the way, we hired a new IR firm, Core IR, to go along with our investment bank, ThinkEquity. We have a solid team in both. They're both very supportive of our company, and it's a great place to be in. And they told me not really to talk about the stock price, so I'm not going to, except I will point out we have a tremendous amount of assets. And so sort of the liquidating value, you look at where a stock is trading compared to our liquidating value, I won't draw any conclusions. But what I can tell you is we have all these assets. A lot of it is in cash. A lot of it's in great state-of-the-art lab and lab equipment and our manufacturing facility and so on and so forth. But then we have these businesses. We have earnings that should explode for the last 4 or 5 months of the year. The third quarter will be a little bit of a question mark only because we didn't do business in June and July. I mean, there just was no COVID around at the time. June, of course, was the end of the second quarter, and July was the beginning of the third. We're just starting to ramp up now. The month of September, I think, is going to be huge, and the fourth quarter is going to be, I think, ridiculous in terms of not only our revenues, but also our earnings. And now I get to talk about what's really exciting to me. And actually, I'm sorry, got one more thing I'm excited about before the icing on the cake. we are expanding. I told everybody we pivoted. We used COVID to pivot into the CLIA lab testing business. Now we're, and I don't like using the word pivot. It makes it sound like we're going in a different direction, but we're actually expanding upon that. We're looking to acquire other labs that are going to diversify us into other types of testing, including pathology, blood, urine, tox. So that, for instance, we have nursing homes we're doing business with that we're just doing COVID testing for. If we expand into these other types of testing, we will do all of that other testing for them as well. We'll be able to leverage a lot of our customers. And so longer term, we're going to build a larger, fully diversified CLIA lab so that if COVID goes away, and COVID's not going away anytime soon. I hate to break it to you, and I don't want to be depressing, it's just a fact. Our vaccines are less effective than anybody thought. I said back in January they would be. Only 50% of the population got vaccinated to begin with, which is what I said was going to happen, and the effectiveness is less. You multiply the effectiveness by the number of people that got it, and the majority of the people in this country are not protected by vaccines at all. And now, and that's being proven by the COVID that's out there, the new variants that are out there. Pfizer is only, they're saying is only 42% effective against the Delta variant, and that doesn't even include, you know, when the vaccine starts to wear off. So you have all that going on, but we're looking to diversify into other types of testing so that longer term, we're not reliant on COVID. But in the meantime, I think our COVID revenues and earnings are going to explode anyway for the rest of the year. Now comes the additional, I won't say, and this really is the additional future, because I'm telling you, I can visibly execute, and our management team can visibly execute. We have a very strong management team now to visibly execute on the lab business, building the lab. If you think about it, there's an arbitrage between small labs and the really big labs. The small labs don't have the capital infrastructure to build out into a big lab, which requires investment in capital. And on the other hand, you know, the labs that are worth billions of dollars, you know, or hundreds of billions of dollars, they don't care about building out a little $5 or $10 or $15, $20 million lab from scratch. So there's a huge gap there that ProPhase can fill, where we can build out those $1 million, $5 million, $10 million, $20 million labs, build them up. In some cases, we can buy a lab for approximately 1 times revenues. Hypothetically, we could buy a $5 or $10 million lab, build it out to $20 million, buy it for $5 million, and then maybe sell it for $40 million. Buy it for 1 times revenues, sell it for 2 times revenues while growing it. So you have sort of a geometric or exponential growth factor involved. We can do that, and that's visible and that's easy to do, and you're going to see that executed on in the coming months. I'm confident in that. Again, quote, forward-looking statements. These are all projections, but this is what we're working on, and we have a history of executing, and I would not bet against me and our management team from executing on the things I'm talking about now. So last but not least, very quickly, and I'm sorry we don't have more time for this, but we just acquired Nebula Genomics on Wednesday. I don't know, maybe a month or two ago, we announced that we had created a new wholly owned subsidiary called ProPhase Precision Medicine. We were going to make acquisitions in it. And then lo and behold, 4 or 6 weeks later, we actually made our first acquisition. And my point in that is we're actually executing. I'm super excited about Nebula Genomics. I just want to clarify a couple of things, because honestly, there were some really, there were a lot of misconceptions about it last week. First of all, we announced that we acquired it for about $14.5 million, but that came with several $1 million of cash. So net of the cash that came along and net assets, we actually paid about $10.8 million for the acquisition. Nebula's internal estimates when we acquired it was that they would generate about $9 million in revenues, and very profitable, I might add, to the tune of like 30% pre-tax net profit margin. So several $1 million of earnings. And this is a business where they're selling whole genome sequencing at $300. Now, what is whole genome sequencing? It's where you test the entire genome. It's where you give an entire genetic makeup. That's as opposed to a 23andMe or an Ancestry.com that's only studying a small part of the genome. So whole genome sequencing provides anywhere from, I've heard the numbers of 100 to 1,000 times as much genetic information, which is critically important if what you care about is future health care, as opposed to just information about your ancestors. Whole genome sequencing can do that too, but the real future of medicine isn't in knowing who your ancestors are, it's in knowing your genetic makeup and tying that into cancers and diseases and illnesses that you acquire. And so what personalized medicine is really all about, it's, historically you get cancer, the doctor says, okay, go get chemotherapy. After 6 months, if that doesn't work, we'll try one of these other drugs or treatments. What if instead you get, the whole genome sequencing where you get a genetic makeup of yourself, you combine that with the cancer or illness that you have, and then lo and behold, based on the research that's been done, it says instead of getting chemotherapy, maybe this other drug or treatment would be better off for you. Why would you want to waste? You're dying. Why would you want to spend 6 months on chemotherapy when your genetic makeup suggests that you shouldn't even be doing chemotherapy? That's the future of medicine. That's what personalized medicine is all about. It's tying the drugs and therapies and treatments to the diseases, but then also personalizing it to your genetic makeup. That's the future. Whole genome sequencing is at the base of that. And then a couple of more highlights that I would like to point out about that. George Church, he's one of the leading figures in the world on whole genome sequencing and genomics in general. He is a founder of Nebula. He's a professor at Harvard. He's one of the original investors. He and several other leading venture capital firms who invested in Nebula, they had their choice last week to take cash. When ProPhase Labs acquired Nebula, they had their choice to take cash or to take ProPhase Labs stock, which they can't sell for 6 months, for which they converted into ProPhase Labs stock at $7.46 a share. Meanwhile, we have a stock trading at $5 and change. So if you don't want to take my word for it, you have one of the leaders in genomics in the world who took our stock. That's how much a believer he is. He's also going to be the founding member of our advisory board. He's helping to attract other members, I should say anecdotally. Well, in any event, he's helping us with other advisors. I've talked to other world-renowned experts to see if they're interested in our advisory board, and I mentioned the name George Church, and they say, I don't even come close to a George Church. But so anyway, I'm excited to build an advisory board where I expect to make additional acquisitions within the genomics field. We're going to take this many steps further. And just to be clear with the whole genome sequencing, last things, I'll try and get to a couple of questions before we run out of time. Our ultimate goal is to get whole genome sequencing from $300 down to $200 so we can compete favorably with a 23andMe or an Ancestry.com while providing 100 to 1,000 times as much genetic information. If that happens, because of price elasticity of demand, we believe that there are consumers out there that will be hugely interested, that will be able to get whole genome sequencing out to the masses in the coming years. We're also going to leverage our food, drug, and mass retail distribution to sell Nebula's products there. So we think that $9 million estimate, I don't know if it's a good number or a bad number. What I can tell you is whatever the run rate is, with our plans, the potential is there to blow this out big, I mean huge. 23andMe trades at like 10 or 12 times revenues, and this $9 million estimate for Nebula, we could blow that out of the water if we get the price of whole genome sequencing down to $200. And then we also want to leverage our labs ultimately, hopefully, where we do the whole genome sequencing in our own lab, which will dramatically reduce our turnaround times for providing results, maybe from 6 weeks to 2 days or 1 day, but also will drop the price down further. And then lastly, we also want to leverage our food, drug, and mass retail store distribution and potentially sell Nebula's products in the very same stores that we're selling our dietary supplements currently. And that's Walgreens, Walmart, CVS, Rite Aid, and so forth. And they're all asking us, all the retail stores, we have great relationships with them, and they're all asking us, what's next, what's to come. All right. I don't have time for a lot of questions, but I'll try and get to them very quickly. What are some of the company's value catalysts for the rest of it? Well, I've already pretty much answered that. Let's see, the next one. One of the best things a company can do to increase shareholder value is to buy back stock. With COVID testing exploding and ProPhase stock at liquidation value, would you consider buying back stock? So that's a great question. I have a history of doing things like that, whether it's buying back stock or dividends or whatever. I'm not going to tell you we're at liquidating value. That's your question. I can't agree or disagree with that. I'm not allowed to. I can tell you we have a tremendous amount of assets. I will certainly weigh all options. And the fact of the matter is, as our earnings explode, you know, if we have all this capital and all this cash as it is, the next acquisitions, by the way, that we're planning, I don't believe we need capital for anyway. And if our earnings and cash flow continue to grow again, you know, I have a history of doing what's best for shareholders. I'm the largest shareholder in the company. I have a history of doing what's best for shareholders. I hope that answers your question indirectly. It's certainly a possibility. It's the kind of thing I think about all the time. Another question. I know I'm going to get cut off soon. I'll read it. Let's see. You paid a dividend this past June because of your cash flow from your COVID testing. It sounds like your COVID testing this fall will surpass your Q1 total. Do you see paying another dividend if your fall testing is as robust as you envision? So again, on the one hand, if our stock is down and we have all this capital, and we're near liquidating value, we absolutely could do, a stock buyback. That's a possibility, something that I would obviously consider. And at the same time, if our earnings take off, and our stock price higher, maybe we do another stock dividend. We did one just early in the second quarter. We had tremendous cash flow. That $4.5 million dividend we paid, we had more than $5 million of cash flow into the company over like a 6-week period. It was easy, quite frankly, to do the dividend. So those are certainly possibilities. I think I have time for one more question. Let's see, lots of coverage in the genomic sector with positive coverage of 23andMe. Meanwhile, it sounds like Nebula has a better offering, sounds like a great potential to knock it out of the park in the second half of the year, to knock it out of the park. I agree 100%. I'm sorry, second question. I hear testing is accelerating again while we don't have as many cases in the Northeast as they do down south. Can you comment on recent testing trends or how the quarter is trending thus far? I think I pretty much answered that question. As far as Northeast is concerned, I can tell you there's COVID everywhere. We're doing a lot of testing in the New York area, and we can tell from our own testing, the positivity rates are through the roof. It's not, and you don't have to worry about one quadrant versus the other. We have, as I said, these independent pharmacies, they're all over the country. So it really doesn't matter where the hotbeds of COVID are. Plus, if there's so much COVID going around, even if it's in some areas and not other areas, all those areas have to be monitored, because when there's a new wave in a certain area, or when COVID starts to pick up in an area, those people have to get tested and quarantined immediately before it spreads rapidly. That's one of the things that we learned in the past year, is how important PCR COVID testing is. And by the way, in addition to PCR COVID testing, we also do antigen testing, antibody testing, and so on and so forth. We run the full gamut there. But the one thing that we learned is with COVID testing, besides vaccinations, with COVID testing, you can get people quarantined quickly. That's the fastest and most efficient way to cut down on the spread of COVID, is to get people that are positive quarantined as soon as possible. I said a mouthful in a very short period of time. I know I'm out of time right now. I appreciate everybody joining the call today. Have a fantastic day, and I wish you all the best.
Ladies and gentlemen, this does conclude ProPhase presentation. Thank you for joining. You may now disconnect.
Thank you.